Hello everybody and welcome to the 2026 roadmap. This is going to be going over exactly what I believe you should be doing. This is what I'm going to be doing in 2026. I'm going to give you my whole strategy for free, and I'm going to show you how to find the best prop firms for this strategy, or how to find the best prop firms for your strategy if you choose not to use mine. Alright, just ignore that for now. Okay, so let's start with the strategy. Alright. This is a trade example. This isn't a trade that I took because it's at the time of the recording of this video I have not been trading because it's Christmas. And you don't really want to be trading during Christmas time because it is not the best time of the year. Okay, so let's delete all of this. So we firstly want to understand how to follow highs and lows. So what are highs and lows? Very simple, you should know this by now. If you don't, I have plenty of videos on my channel. Right, highs and lows, high, low, high, etc. Okay, so you want to understand how to follow these, marking them out and following breaks of structures using candles. So a candle break would be like this. So let me find a good break of structure that makes sense. Over here, this is a good one. So you can see we had this high over here. You drag it across and you can see this candle right over here. Had a candle close past this high. That makes sense, I'd imagine. So let's go back to our diagram. So that's how you find breaks of structures. It has to be candle breaks. Alright, so high, break, creates a new high, we break it again. Okay, so these aren't important. It's when we get to the reversal. So my trading strategy is to look for reversals only. So I'm going to give you the entry criteria and then I'm going to show you how to know which directions to trade in, because you can't just choose to trade any direction. You need to have a bias on a higher time frame. So let's start off with the entry criteria first. Okay, so we want to wait for a downwards break of structure considering our bias is short. So I'm going to put this at the top. Bias short. Okay. And when you get this break of structure to the downside, you want to mark out either an order block or a fair value gap. Completely up to you. I use both. I'm not picky. And we want to see this order block or fair value gaps get cleared / tapped into. So step 1, break of structure, and then step 2, clearance of FVGs / OB. Alright, beautiful. Okay. And then we want to repeat this step again. So do you see how we've created this low down here? I want to see this low get taken out again. So it's the same thing twice. The reason why we don't enter a trade from this one is because that's not a confirmation. This is just, we call this an intention of a change of character. I don't use change of characters, you can call it that, but it's got the intent to change character. So in other areas you call it a break of structure, and then this is the change of character down here. Okay, but I call it an intent to change character, and then this is the confirmation bias. Alright, so we're confirming the bias to the downside. Then what do? Repeat it. Repeat that process, mark out an order block or fair value gaps, and then when price returns up into this area, you can look for an entry candle. So that could be a bearish candle to the downside. It can be a body break of the candle, such as this. So imagine you've got a candle here, this one. When price touches the bottom of that candle, you would enter. So that is another way you could enter, putting your stop loss above the highs and stuff. There's many ways to enter into a trade. All right, just pick and choose the best one. I'm just giving you the blueprint on how to follow the system properly, and then you guys figure out how to enter, because there are many ways to enter and I can't cram them all into one video, right? But that is the main entry criteria, and then this is where you would short from. Stops just above the high created from the break, and then you would go for that low or go for a psychological level. Alright, so let's bring this over to the chart down here. Alright, let's bring price action all the way back here. Delete all of this. So this is choppy price action. I went over this with a friend of mine. Call him a mentor him, but it's just a friend. I don't mentor anybody just yet, because it's not. I don't need to. I make all. Yeah, right. So you can see we're making breaking structure. We're going upwards, but we are waiting for price to short because our daily bias is short, and I'll go over how to find a daily bias afterwards. Okay, and then we've got this low all the way down here, and when price comes and breaks this, let's wait for that break. There you go. So there's that break of structure. Next, we want to mark out fair value gaps or order block. All right, so I have this order block up here. All right, so this is the major upwards candle before the break of structure downwards, and we also have this one up here. So any of these two get cleared, I'm happy, but mainly we want to see this one get cleared. And when price comes up, it clears this one, and we've also cleared a fair value gap. So we just really want to see clearance of areas. So we cleared this one. We also had this fair value gap here that got cleared. Very nice. Okay, and play price action onwards. Now, so when we broke structure downwards here, you can see we created this low, and price has come and broken structure for a second time. Lovely. Alright, so let's delete all of these order blocks and fair value gaps over here and focus on where we want to enter from next. Alright, so if we are focusing on order blocks from the second break of structure, I would go for this one personally. For personal reasons, it's hard to explain, but it's the last upwards candle before the break of structure. Alright, but usually I would go for something more like this over here, this big upwards candle, because that is where most of the orders and volume is. So don't know if you guys are familiar with order flow and heat map charts, but if you put this into an order flow and heat map chart, considering it isn't Forex, you can't do that on Forex, but if it was futures, you would see there are a bunch of orders striking through this area, and this is where the orders have been built up before this big break of structure down here. But this candle's too big, so I try to look for more of a refined area, because if you're looking for an order all the way through this, you could get tricked into a trade, and then it'd probably dump downwards further on. Okay, so just make sure you have a more tight, refined area when looking for trades. All right, and as you can see, price has come up and it's tapped into this point. Beautiful. And when price tapped into this point, I want to enter at the bottom of the candle that's tapped and just put my stop loss above this high. And then, like I spoke about before, go for a psychological level. So let's go for 535,100, which is all the way down here, and that is the strategy. All right, so you play price on, you can see, do we come that? Yeah, we do. Okay, not a trade I took, so I can't remember this one very well, but as you can see, pretty nice trade. So if you don't understand most of that, just rewatch it. All right, it's a really simple strategy. It's not difficult. Okay. Next, we want to look for is the daily bias. All right, time frames for this are the 4 hour and daily or above. I never use above that because it's pointless. You're never really gonna catch a trade and hold it for a week. We're only holding trades for like an hour max. Okay, and then of course your entry time frame. Entry time frame is going to be the 1 minute to 5 minute. All right, beautiful stuff. So that's how you find daily bias, and then daily bias, and then that's your entry time frame, of course. So if you go to the 4 hour time frame, just for an example purpose, the way you find your bias is by literally just using all of this fair value gaps and structural points. So right here, I can see that we are bullish overall. But when you look backwards in price, if I draw a high onto this, pull price backwards, as you can see, we have swept liquidity over here. So we had this high that we have swept. And if you go into this candle on the 1 minute time frame, show you. So this candle using backtest, we have, I know this is a long time ago, but we have, what you want to do is mark out 1 minute fair value gap areas. And then I see these 1 minute areas that I have marked out have been tapped into perfectly, and that is how you find your bias, okay? And then obviously you would drop down to the 1 minute time frame, 5 minute time frame, and when price is tapped into one of these points, as you can see, this one got invalidated and isn't clear anymore, but we tapped this one all the way up here, tapped into an area from September this small, okay? And we rejected, broke structure, got that second break of structure. This isn't the right area, we're looking further over here. But yeah, you would have got that second break of structure, but no entry, unfortunately, here. And that was at 2 o'clock in the morning, so you wouldn't be trading it. But yeah, you can see these areas get reacted from really nicely. Right. So that is the strategy. Okay, now the next thing we want to look at is prop firms. So once you've mastered the strategy, you're going to want to start making money from it. Trading is not something you do for fun, it is something you do to make money from. Alright, because I hate trading most of the time, but we need to make money from it. Okay, so the rules. So before we go into how to find the prop firm, I want to go over the strategy and my experience with it over the years. A lot of things have changed recently for it, so let's go over that. Alright, so overall I have a 45% win rate over 4 years. Okay, so over the space of 4 years I've had a 45% win, but in 2025 I have had a 75% win rate, 79% to be exact. But I'm not going to use 79%. You want to round it down to the nearest 5. That's what I've always done. So this 45% is 48% over the past 4 years, but round it down. You want to lower your expectations as much as possible. Okay, so this strategy, I've adapted it using higher time frames, closer areas, etc. And because I used to trade using only the 1 minute time frame and 5 minute time frame in that range, and would never use a daily bias. Now I started using a daily bias, and look at how my win rates jumped over 2025. Massive. All right. So that's that. Okay. Next thing you want to understand is this is data you collect over a long period of time, so I recommend doing back testing. Is how many trades do you lose in a row on average? Okay, so how many when you lose consecutively, how many trades have you lost in a row on average, sorry. So you want to find that average, you want to find the maximum. So my average losses in a row, if I do get a losing streak, average losing streak is around 4. So when I have a losing streak, I have 4 losses, and then I will have a win after that. And then my max is 17. So this was a depressing time for me. This happened, I had a losing streak of 17, okay? But this was in 2023, this was a long time, right? And we've, on average, had 4 since then. But that is the biggest losing streak I've ever had. But the funny thing is, I came out profitable that month. Right, so that's where risk to reward comes into play. I might have lost 17 trades that month in a row, but at the end of that month, I came out profitable because my risk to reward ate everything. All right, that's the important part. Right, so once you've determined all of this, that is when you want to go over to prop firm match. Let me move my head out the way. So this website is called Prop Firm Match. I highly recommend it because you can match your strategy over to a prop firm. So you've got Apex. Alright, so this strategy that I use in 2025 would have been perfect for Apex Trader funding. Perfect for any prop firm, to be honest, because the win rate was so high. But let's put into perspective if we have a 45% win rate. Okay. So yeah, if we have a 45% win rate, you want to use this website to your advantage. You can match it to the consistency rules. So let's just randomly click on let's go to funding pips. Okay, let's say you have a low win rate. That is when you want to go over to consistency rules and check them. Okay, consistency rules. Your biggest winning day must not exceed 15% of your total profits. You must maintain a 15% consistency score to request a reward. Okay. So a 15% consistency score is quite low. Right? But for some people trade with a really low win rate and have high risk to reward. Okay, I have a high risk to reward, but my win rate's not low. But let's say you have more of a 30% win rate and you're averaging 1 to 6s and 1 to 7s. That's when the consistency rule can be quite important. You've got to be very careful. And for example, if you go over to FTMO, the most popular prop firm on the planet, you can see the consistency rules are none. So this prop firm's perfect for anybody. Whereas if we go over to Apex Trader Funding and you go to consistency rules, you can see there is a 30% consistency rule. And there are a ton. If you go to firm rules, there are a ton of rules that you need to follow. So check all the rules and then match the prop firm to you and the strategy, and I'm sure you'll be profitable and make a good amount of money in 2026. So I really hope that helps, and I wish you all the best of luck in the 2026 trading year. If you have any questions, please leave a comment down below. Thank you very much for watching. Please like, comment, subscribe, and click the link in my bio because there's a lot.